Welcome back. Still tuned into Market Sense. Well, it's been fairly heavy on the macro side because just a short while ago you had the Prime Minister's Economic Advisory Council which came out with its key assessment of the economy, and from the looks of it, it wasn't a very pretty picture. The FY13 GDP forecast has been lowered to 6.7% versus the earlier estimate of 7.5% to 8%. Inflation forecast has risen to 6.5% to 7% from the earlier estimates. There have also been a slew of assessments of various sectors in the economy. Mining sector expected to grow by 4.4%, agriculture 0.5%, and a pickup in IIP and manufacturing is expected in the second half of the year. To talk about this and lots more in greater detail, Siddharth Sanyal joins in from Barclays Capital. Siddharth, just wanted to get in your perspective. Do you think that what the Prime Minister's Economic Advisory Council has detailed is something that was already known?
To an extent, yes. There is undoubtedly there is a slowing in the growth momentum, and they are trying to give it a number, but it can be a situation where this number can also have some more or some sizable downside from here on as well. So that remains a risk.
That, are they being too optimistic with their estimate of 6.75% GDP growth for FY13?
Well, it looks like that. In a sense, at some point of time, we also had a similar number to a couple of months back when the monsoon forecasts were close to normal. But since then, that is playing a clear spoil sport in case of India's domestic demand. And this time, we are in a phase where investments or exports are not really doing that well. So consumption remains really the backbone of the economy at the moment, and some kind of bad performance in rural income, agriculture, etc. can have a big dent in consumption and thus in overall GDP.
So that you do have, Dr. Rangarajan pointing to one statement saying that the continued turmoil in Europe is also going to impact India's exports. For the Indian economy overall, how much should we hinge on all of the turmoil that's going on overseas, and how much precedence should we pay to all of our own domestic problems?
Well, there are two very different ways of looking at it. In a bad year, when we are talking about a benign growth rate of around 6% or something like that, most of it can actually come from domestic sources. So at that point in time, the domestic growth story or the domestic factors become very, very important. When we talk about a much higher growth rate, then the economy would have to fire on all cylinders. At that point of time, the external sector becomes very important as well. But at the moment, we are not really talking about that possibility that much. So all we are talking about is whether the growth will hold up this year, and possibly the domestic factors are much more important in my view.
So that when the going is good, everyone talks about upgrades. When the going is tough, everyone talks about downgrades. Do you think it's too early to make some kind of an assumption that for FY13 we will slip below 5.5%, or that could be a hard reality?
Well, that's difficult to say. At the moment, I'll not take that at least as my base case. See, the biggest problem, whatever unfashionable that might sound, the biggest problem in my view is how the monsoon is panning out at this moment. That can have a bad impact on agriculture industry to an extent, for segments of services, very badly on the overall consumption demand, etc. Now, as of now, we get to see that the summer crop is definitely going to get impacted with even at this moment when we are seeing 15% kind of rain deficit. But if I take the assumption that the winter crop is more or less in place, then the damage should not be that much that we should talk about a below 5%, a below 5.5% kind of number, at least as our base case. But if that turns out to be reality, if the winter crop also fails, then possibly we have to take that also possibility as well.
So that's Sanyal. Thanks very much for taking the time out and joining in.